Hello, Warriors. Hope everyone had a nice holiday, a nice 3-day weekend, and hopefully you weren't like Mortimer in trading places saying, "Turn the machines on." Who was jonesing over the weekend? How you doing, Ingmar? Michael Weissman, Alexander, James, AJ, Saloom. Have a great week, everyone. Good. Hi, Kman, Patrick. Okay. All
Good
right. So
morning,
we have some.
Coach.
Hey, how are
Morning,
you,
Dale.
Blake?
Morning, Blake. Morning,
Good.
everybody.
Hey,
Good
hey,
morning. Good
guys.
morning, Kman.
I guess my sinuses weren't the only thing to go viral in the last month or so. It's never happened to me before, but I had a YouTube video that has like 172,000 views. That ever happened to you?
What's that?
Did it go?
170,000 views on a video?
Nope.
I
Nope.
wonder how that happens. I'd sure like to figure it out.
Yeah,
Anyway,
well, that's the thing about algorithms on YouTube. It just they catch hold and then they go. So.
wow. Anyway, so here we are into a new week. Would you guys say the biggest number this week is non-farm payroll or
I
any
think
others?
so. Kman?
Yeah, employment data. It's an employment week, so we always have to be very careful that week. Yeah, that's probably going to be for the dollar at least the point of discussion, the point of interest.
Okay. All right. So Dixie, you know, could pull back again. I'm going to be interviewing Fed Guy 12 today,
Very
and I
good.
was reading some of his stuff that he thinks that it's just a waste of time for the Japanese to think they're going to be able to hold it under 152. So, obviously he thinks this trend's going to continue. We'll ask him why when he gets here, but, he hasn't done anything. It's, look at these ranges. People aren't trading it.
Yeah, but that's probably because some know what's going on in 152, and I wouldn't call it interventions unless it's the Japanese mega banks on top there. But to me, as I said already a couple of times, there seems to be other stuff going on here as well. So the risk is there that we wake up one day and we're trading 153,
Yeah, like
and
gap is.
then probably 145 when they intervene. But
Yeah,
I think there's something else going on at 152. This really feels like in my market making days where you have a very big barrier sitting there, and for as long as they have enough ammo, they can defend it.
okay. And they could go there again at any time. Maybe the NFP is going to be the day.
Yeah.
Gold made new highs, coming off now, and silver still, bringing up the rear. I think this could be a failing rally here
Yeah,
in silver.
we had two illiquid days there, and
Yeah,
the two illiquid days took it up from gold up from what 22.20 up to 22.70 or so. Where
yeah,
did we go?
yeah.
Um,
It flies in the face of Peter Goodburn's narrative that the white stuff will lead. I mean, platinum doesn't look that great to me.
yeah, but
Gold
that's
looks,
okay. I mean, that's also I think the how shall I say the biggest market is gold, right? And that's where the
yeah,
most participants are. And I think that's probably why at times silver, the other ones are lagging, but platinum, palladium, maybe they did the move before, and then gold is taking over, and now that Bitcoin is struggling to get over or stay over 72, perhaps gold is still the one that people want to have, but we'll see tomorrow, or even today already. If that thing still continues to have legs, because as I said, we're coming out of two virtually zero liquidity days, right? Where we
yeah.
did those 45 bucks higher, and we will see when the real market opens again, where we
Okay.
can end up.
So I've been talking about 92 or so for the gold silver ratio, enough to take out these highs. You know, that could happen this week. Now it's tough to come up with anything. I still think you have to sell rallies across the board in dollar pairs. I don't see any reason to get long. This looks like a, some type of continuation phase. Could it
Mm,
rally back to here? Yeah,
yeah,
but it'd be a sell, right? It's good
yeah, yeah.
euro.
Well, I'm still somewhere positioned. Got a bit of Kiwi, got a bit of short, got a bit of dollar Swiss long still. Thinking of actually hammering euro dollar if we don't get anything significant on the European PMIs, but they're all most of the final numbers coming out tomorrow. Yeah, it's the dollar still looks okay right now, but
Yeah,
again, we will have to wait for this month because a lot of people have been calling for the jobs market to finally start to show weakness, but so far it's been defying the laws of gravity. So get another good report. I guess the dollar is going to do this the next leg up, taking euro dollar perhaps back down to 106s. It might not even 105, you know.
yeah,
Um,
yeah,
and yeah, your cable then should be looking better as well, and dollar Swiss as well going up, and then the rest, Aussie and Kiwi will probably follow suit. I don't think that those Aussie and the Kiwi are really leaders right now. But technically, the Kiwi has broken down a bit. So yeah, I think that one still has perhaps a little bit of legs.
and when it comes,
Look how vulnerable the Aussie looks. I mean, it
Uh,
looks like it wants to break down.
yeah,
yeah,
but Kiwi looks more vulnerable if you look at the Aussie Kiwi.
Oh yeah, the Kiwi break of 60 cents was big last week. That was a big deal. And the
Mm,
fact that we closed below there and we just, are consolidating below that 60-cent level. The next stop is 59 cents. That's the 78% retracement.
mm,
yeah, you've been all over the Aussie for weeks now.
Yeah,
But
I just sell it whenever I can. You give me
yeah,
an uptick and I'm going to sell it. I'm short right now, so
yeah,
that's been like a pretty consistent trade over the last few months for me. So
yeah, it comes down to, I mean, this line is way under 63 now. So we'll see. I was like well, not way under 62.80.
So I know you guys were talking about precious metals. Did you guys notice that the gold hit a dual 161% confluence? As Kman you were pointing out, a very, very slow market trade. When everybody's on holiday, it hit some really key levels and reversed from there
Would you
today.
short it?
No, but I
Drops
did put
over the
out a
high?
pattern in play on ForexAnalytix. So
Okay.
no, I've got too much dollar exposure. I don't need to. It's kind of like if I shorted gold, it's adding more positions to what, one of the things that I learned when I especially when I was doing prop trading for a big, fund, if you will,
Yeah,
is just having too many positions on going in the same direction. So
yeah,
if I shorted gold right now, it's like I'd have to
yeah.
cut some of my dollar longs, and I don't want to do that at the moment. So
Look at yields. I mean, they keep vacillating here. You
yeah.
know, they, I don't know. I've a vibe that we could just blow through 440.
Yeah, I mean, this week could be the week, Dale. If, as I said, if the job numbers come out better than expected, that could be one of the reasons. We do have, if I'm not mistaken, only a very small, yeah, that's it, a very small U.S. Treasury auction week this week. So that's not where it has to come from if something breaks or top or bottom. So it's really going to be the data who are going to be the drivers right now.
You think that
And
would finally cause some risk off?
oh, um,
They're coming off today a little bit. We were up
yeah,
24, I believe, when I got up.
Yeah, you
Yes,
know,
sir.
and I've been talking about that. We've been talking about it as well in gold and risk and everything. From October, November last year, we've
Yeah,
had pretty much, apart from the February one, where everything was just flying through
yeah.
and
All
continued.
one market.
The uptick, the end of month market, like taking everything
Yeah.
up, and then the start of the month, things cooling down a little bit, and then we wait for the next set of data, and it does seem that we are in similar kind of situation again. Yeah, so I think what happens this week is probably going to be again important enough, especially the jobs, because you know, and the funny thing about it is that now even Powell starts to talk about it. So I'm quite happy to have front run him on that side. That he's talking now again about the dual mandate and not only about inflation. So I think the jobs numbers are finally going to be very important.
Another one of these Monday gaps in VIX. So
I mean,
sometimes they
futures are
follow
coming off
through.
pretty good right
Yeah,
now, Dale.
yeah. Why don't you
Yeah,
grab them?
they're moving. So
Yeah. So I thought maybe the correction would wait until the eclipse, but the other scenario is we break into it. So anyway, uh,
when is the
we'll
eclipse?
see.
Is it the 8th or the 9th? Or is it
I
the
think
night
the
of the
8th.
8th? What's it fall on?
I think the 8th. And you know, on these events, you have to give it at least one day either side of it. You know, a couple days either side of it for turns. Doesn't always happen on the day. It's, you know, in the zone. I think there was an eclipse uh 2000 years ago yesterday on anyway, we don't talk religion. Anyway, let's see. Why don't you grab it, Blake? See what you're thinking this weekend. Nick put out a nice chart saying this weekend if Apple takes out 68, it measures all the way down to 140, which is 78.6 back.
Yeah, let me
And look,
see here
that's
real
where you have
quick.
some pretty good confluence comes in at 150. The 200 week is 149.
So yeah, on actually on Traders Summit, I think what Nick did is he posted some stuff from the yeah, right here you can here I'll forward this over to everybody. So everybody has it. I'll put it in the chat box for everyone. But yeah, he posted some pretty good charts. And if you kind of scroll through them, his look on Apple, I mean, this is a big deal in my
Yeah.
opinion. You know, you got Apple that could really set off a big double top. I know we've talked about the weakness in Apple over the course of the last couple of weeks, but
Months,
really, I'm sorry.
months.
Yeah. You've been talking about like the divergence, and I mean, we have to respect the fact that Apple is the, well, it is the largest holding in most, for most institutions. So that's a big deal. I mean, if Apple really starts coming off, and I'll take a look at the stock here. Let's pull it up really fast just so you guys can see it. I mean, that I've been looking at as a big range, and you can see we've obviously talked about, if it does break, where we're going, that would be a big sell-off. And as we've discussed, Dale, here, it's not like it's going to uncharted territory, but the fact is that it's such a widely held position that a move like that could have some serious consequences in the rest of the market. So,
Yeah.
and in sentiment in general. So, yeah,
Yeah.
it's definitely worth looking at. But talking about currencies, well, actually, before we even get into currencies and we'll walk through some of these charts. I do want to talk about gold because I think this was a big deal. So if you saw gold, matter of fact, Nick was in the chat room last night. I saw him just before I tuned out. He was like gold, gapping higher, and we were up like 1% last night. We were very thin liquidity, as Kman just pointed out, but notice how we hit the 161% extension of this move, but also, and this is a big deal to me, 161% extension of this is that move from Sunday night in Asia. Remember when we took out the stops?
Yeah.
So from that high down to the low that we formed, that's 161% extension. So we call that a double confluence of fib levels right there. And so, naturally, when I see that in the morning, I get up in the morning, I'm like, yeah, I have to put in a pattern in play for possible short. Because when you see a double golden fib confluence like that, being counter trend, and in this example, 1/4 size makes a lot of sense to me. So, anyway, that was just published just a little while ago. So you can see, real big rejection of that. And then silver, I know you guys talk about it quite a bit, but man, I don't know anybody that's not bullish silver. So, this could be a really
Bobby said it was the most hated metal. You know, according to her, people like uranium and gold, but they hate silver.
Mm.
That's what she said.
Maybe, I
That's what
guess.
miners.
I don't know. Just maybe it's everybody I'm listening to, anybody that I've
Yeah,
listened to. I can quantify, I can say that.
yeah.
But then again, I'm not in the precious metal space. It's just, when you hear
Two
analysts or macro
$200 silver people are
yeah,
talking.
anybody who's into metals that I've listened to are like, gold's really rallied, but silver's got so much further to go. It's always the same.
Oh, okay.
Silver's going to go from 25 to 40 before gold goes from 2,200 to 2,400. You know what I mean?
Yeah.
So like the bigger bang for your buck is going to be in silver. So everybody's long silver right now. That I've seen over the last couple of months. But then again, again, this is my experience, not necessarily yours or anybody else's. But anyway, I thought I'd just point out that it's really struggling here at $26. And while we trade below $26, I would be a little nervous. Couple other things that I think are
Depends where you're
important
looking.
is oh, go ahead, Kman.
Depends where you're long at. I'm not very nervous. I'm long since 22s and wherever. I'm not really nervous on silver.
Yeah, good point. But I would just be saying if you've watched this move of silver not really going over anywhere over the last couple of weeks,
Yeah.
and gold's rallied quite substantially over the last couple of weeks. Getting back to where I'm at. Okay, and gold rallying over the last couple of weeks, but silver just not.
Yeah.
I
You
would
know
probably
what?
be a little nervous if I owned silver
Mm.
back, if gold took off and then I saw silver, try to rally and not really be able to move over the last couple of weeks. If I got long a couple of weeks ago, I would be nervous. But yeah, if you own it at $22, well, you got a great price for
Well,
sure.
I mean, it's just the way. Well, it depends how people trade it. If you're long to hold at 25, no. I mean, I wouldn't be feeling. I wouldn't be feeling extremely confident right now. But I've been trading it this way for years now, and when it rallies, you sell a piece out of what you buy, and then when it comes down, you buy again. If that is the way you want to trade it, if that is your direction. But I don't think that anyone trading silver actively, unless those guys who are with the Reddit whatever thing and always buy tops. I don't think that the rest of the medium term people are very nervous unless we get into a recession. Then if we go into a real recession globally, then it's perhaps time to let it go because then it's not going to behave very well. That's for sure.
That's a good question. You know what? Let me ask you this. If we had a question from D asked about, talk about gold more.
Dirigi.
What do you think happens in gold if we get into a recession period? Is that going to be the cue for gold to go higher, or is gold going to come under pressure if the dollar, rallies? What do you think
It'll
here?
Initially,
pull
I think
back.
people are going to jump on it because if you are in a recession, people want to hold more physical stuff. But then afterwards, it depends where your recession goes. And if it's a US-led recession, then the dollar will only find very limited support as well on other stuff. But Yeah, I think initially it will fly even more, and then, but I still think gold. There's a lot of good reasons why it's up here, but then there's also a lot of Chinese, Russian, whatever flows taking it up here, and I just wonder when those guys will have enough of it, and then we all of a sudden could have like $100 a hole to the downside, and all of a sudden we trade back at 2100 or so. I mean, that's all possible because there is quite a bit of speculation in there as well. But if we go into a recession, it probably first flies, and then we will see. And because if you go into a very deep recession, people will need money at one stage, right? So then you sell your stuff out and to pay for other things. I mean, trading a recession is all but obvious, depending on how deep it gets. But if you look at, for instance, we've been in a technical recession. One can say in Europe and the UK, it didn't change the picture for at all, right? At all for those things for the metals and things.
Yeah, true. Good point. Dale, notice that really big daily divergence on relative strength. Really ugly for gold, right?
Yeah, and you have a 3 drive with a throwover if you draw a line from the past 2 highs. So you wait for it to get back under, and it's doing it now. So, that that took out all the, any bear. I don't know who was still short, but you know, that could be, throwovers sometimes are terminal moves. And this one throwover, you know, may not even last a day. I've seen
I
throwovers
like
last for
it.
weeks.
I like it. Maybe that pattern in play is going to actually work out then. That
It will. What are you looking for? What's your target?
back to 2200. That's it.
Oh yeah, yeah.
No, nothing to write home about. I mean, just back to the breakout point. That's all you got to really expect
Yeah,
and when you're in a strong, uptrend like we're in.
yeah.
Hey, let's discuss a little bit of currencies before we turn you back over to uh uh Joseph Wang. He's going to be here in a little bit, so I want to talk a little bit about what's happening in the currency market. So we got the euro. I know you discussed it a little bit earlier, Dale, but dollar's still very strong here, and we've got the euro, trading heavy, and we were talking about how the Aussie, still looks very heavy as well. Cable, this is my week ahead video, like one of my trade setups. If you guys don't know that I do this every week on the week ahead video, I do my best 3 trade setups that I see, on that weekend. And then the next week I review the previous, what I talked about, all 3 of them, and then go give you a fresh new 3. One of my 3 trade setups here would be sterling, just because a couple reasons. You'll see it right here. This retracement is an 88% retracement. You'll see it right there, right? It's also a 38% retracement of this move, of this entire move here. So you got an 88 and a 38% retracement, fib confluence, channel support. You can see there's the channel, right? Also, it is the 200 DMA. You can see it right there. So being the 200 DMA, 88% retracement, 38% retracement, channel support, a breakdown below 125.65, I feel is going to be very bearish. I just want to make sure before I say something. I was like, do I have any sterling? No, I'm not short cable right now, but I'm gonna openly just get short on a breakdown below that. I don't know what the catalyst could be this week. I'm not expecting. We don't have any real. We have some economic down, but not a lot out of the UK. We have construction PMIs on Friday. Kman, is there any good like
Yeah,
data
the
coming out?
final manufacturing PMI tomorrow. For the rest, I may have missed something,
No.
but I don't see anything like really shocking. We've got yeah, this is all final, I think, final PMIs. So unless there's something coming out really far from expectations, got some housing prices as well, but Yeah.
It's a bit more of a dollar driver this week
Yeah,
then
nothing
probably.
major. Yeah, yeah, yeah.
Yeah.
Or
Well,
something, if something happens on euro sterling also, but that thing seems pegged around 85.5 right now.
it sure does. You know, looking at the dollar index, I'm still very constructive here. We're above the 200 DMA and the 50 DMA, which happens to be sitting right on top of each other. I think, and Dale, I think you echo this sentiment. We're going to
Yeah,
106 and change. And if
yeah,
things get crazy, you know, we could be trading at 109. You know, I
yeah,
see Gartley to butterfly pattern very easily. And don't think a butterfly pattern can't extend to 161% extension, which would be all the way up here. But, you know,
yeah,
baby steps. The dollar index first looks like we're going to 106 and change. And that's you know, and you can see it this week, right?
yeah,
Everybody continues to go and believe that the US economy is weakening and they're going to lean into the jobs data and there's no way we're going to create 200,000 jobs this month. And you know, everybody's going to expect, you know, that finally the jobs report, you know, or our labor market starts to show some weakness because maybe, you know, jolts or the ADP might suggest it. And then you can just see it happening, right? The non-farm payroll, we create 240,000 jobs because it's an election coming up. If you guys didn't know that, and so of course the jobs data is going to be great. And I just put on my tinfoil hat. Dale, did you catch that?
yeah, I did.
So anyway, you get, you know, you got a good jobs data, and you know, we get that U.S. exceptionalism story, and the dollar continues to rally. I mean, do you see anything different, Kman? How do you feel about
Yeah,
the economic
yeah.
data this week?
Yeah. And I there's a lot of stuff that is underpinning still the equity markets, and I know that technically there's no reason to be bullish because we are bearish because we are at levels, but remember what happened on the November jobs report when it came out like a very good report, and the
Yep.
stocks started to rally. And that day I recall really well that I was saying like it's not because we got a very strong number and the yields will probably go up that stocks can't rally. And that's exactly what happened. Now
Yeah,
this week, for this week or the months to come, I would say watch out for the opposite. If we start to see weakness in the US data, especially on the employment front, we may see a bit of a knee-jerk reaction on those equities, but then it will depend on how bad the report could potentially be. Don't go blindly buying S&P if the report is really bad, because thinking that yields will come down and the stocks will go higher. If the jobs market start to turn around, then I think we could see exactly the opposite of what happened from November until now. So that is something that I'm going to be watching in this week's jobs report and what the effect may be on equity markets. Now, having said that, I'm still basically long dollars, and we will see what happens. I may trim some before the reports. But I'm going to pay close attention to the equity markets. I think for the equity markets to rally, it should actually be a relatively good report.
Yeah, well, you know, I don't know what's going to disrupt it, but remember we do have a lot of economic data this week. One of the other things that we have this week, and you're going to hear, I'm sure you're going to hear Joseph and Dale talk about this. There's a lot of Fed speak this week. Powell is speaking on Wednesday. It's going to be Wednesday morning. He's going to be in Stanford talking to the Business, Government, and Society Forum. But there's a lot of Fed speak, like Goolsby speaking, Harkin, or Barkin, and I can name off all the members that are speaking. But there's a lot of Fed speak all week long, so that's going to be some natural like landmines around the market. So just keep that in mind. Thinking about who are the hawks out there, who are the doves, what are they saying, and what chorus are they singing? And I'm sure Dale's going to be asking Joseph Wang about all the Fed speakers this week, and how they're gonna tilt. But before we hand off Dale, we do have ISM manufacturing PMIs coming out today. could move the market because liquidity is not going to be great. So just keep that in mind. And I want to go back to Kman. Kman, what is the one trade that you're looking at this week that you're going to keep an eye on?
Well, apart from the dollar, well, we always monitor the 152 in the dollar yen, I would say, and then I mean, on the crosser side, we do have the Swiss CPI out this week, so I'd love that to show a continuation of the move, relatively weaker, so we can still sleep on our both ears and stay short Swiss franc. That's going to be the other one. There's a lot of stuff happening, but those are the ones probably that's gonna really stick out for me. Yeah.
Very good. All right, I'm bringing over
Thanks.
Joseph. Dale, I wasn't sure if you could do it. I'm doing it myself. So, guys, I just want you all to be paying very close attention to the Aussie and the Kiwi and sterling. I think and remember the dollar's moving, and
Oh,
it's
guys.
you're seeing this break one by one. You're seeing the dollar break higher against, obviously the Kiwi. Aussie looks like it could be up next. Sterling below, 125.65, and the euro, is just drifting lower. You're seeing the dollar just chipping away at individual currencies one after the other as the dollar index moves up. So just keep those in mind. Dale, thank you so much for taking us. I hope everybody had a wonderful Easter weekend. I know it's Easter Monday in a lot of parts of the world, so I hope you all are enjoying your Easter. If you're with us right now, I hope you're enjoying your holiday, and I hope you enjoy this interview from with Dale with Joseph Wang. So Dale, it's off.
Okay, thank you, Blake.
All yours, buddy.
They will. And Kman, thank you very much.
Yeah, hang around. I like Joseph a lot.
All right. So Joseph, welcome back to F.A.C.E.
Hey guys, thanks so much for having me. Just before we start, I know that Harold Malgrim, I believe he's one of your invitees.
Yeah.
He's been asking about links and so forth. It would be helpful if we could have like calendar invites and like session links so that the panelists are more easily joined.
I did post a link back on there.
Okay, he's looking for it, but
yeah, I did reply to him. I hope he will copy that link and then just go on.
All right, let's do it.
Yeah, I'll get a hold of them. So welcome back, Joseph. If people don't know you, you were on the Fed trading desk. Were you ever part of the plunge protection team?
That doesn't exist, Dale. Don't talk about it.
And you certainly wouldn't need one now, would we? And congratulations. Last time you were here, you were bullish in market, you were long calls, great forecasts. You ever find a difference between making a good forecast and trading it well?
Yeah, absolutely. I mean, even though, for example, right now I'm really bullish continue to be bullish throughout the year, but how you put on that exposure, it really matters, right? So
yeah,
like you mentioned, I've been putting a lot of calls on, and now I don't have any calls on right now because on the one hand, I think we should pause a little bit, but on the other hand, I'm really scared of missing out on further upside. So it's a tough place for me to be at right now. So it ultimately comes on, I guess it's your judgment and also things like how expensive vol is and where you.
How about emotions and psychology?
Yeah.
All of that stuff, huh?
So I think that right now, just going on with what Blake was talking about, the dollar's been notably strengthening a lot. And that could be just some reason for the market to kind of pause a little bit. I noticed in the middle, right when we opened in Sunday overnight, we had the equity market surging, and now I think it was giving a lot of that back. And the dollar has been progressively strengthening. So I think so that's a good reason for the market to pause a bit. And right now it looks like yields are rising up along the curve. So again, that was not the case in the overnight session. We had Treasury futures basically flat throughout the overnight session, but now it seems like we're, dollar strong, yields up, equities down. It makes sense so far.
Okay, I did want to ask you, since you brought it up, this 420 area in the bond market seems to be a pivot, and we've had quite a bit of action on either side, but it almost looks like that's a weekly that we could get one more run. What are your expectations? If anything could drive it, could it be the NFP this week?
So the
Wow,
NFE, I
what
think it's
was
going
this? What was this about this pop that we just had?
to,
ISM?
no, let me check my data. I don't think anything happened. So
Okay,
US, no, ISM is at 9:45. We haven't had any
okay,
data. I guess people just woke up. So now, to be perfectly clear, when I look at the bond market, it looks like yields are trending higher, right? That seems really, really clear to me.
okay,
And I think that they should too. The way they're where we are as fiscal policy is concerned is very much that we have a significant fiscal deficit, economy continues to do well. And if you have a 5% fiscal deficit every year, which is what we're projected to have for the foreseeable future, that should push yields higher. But at the other hand of that, though, you also have the Fed that's projecting, rate cuts. And I think between these two is what's been driving yields. Now, ultimately, my expectation is that the upward pressure in yields prevails, and we have a 10-year that's closer to 5% by the end of this year.
okay. All right. Even with your article about synchronized easing,
Yeah,
you're
I
still
think that's
looking
going to
for
be part
higher
of the
yields.
I think that's going to be part of the reason why yields go higher. So when you have synchronized easing, which is what we're having, central banks around the world going to cut short-term rates,
Right.
I think that's going to cause the economy to heat up, and that's paradoxically going to put upward pressure on longer dated yields. It'll steepen the curve by cutting short dated rates and then having the long dated rates move up a little bit. Now, 5% on the 10-year, I don't think it's high given where we are as an economy when it comes to growth and inflation. So that seems reasonable to me.
Okay. Do we have the dot plots correct now from where we were a few months ago?
No, I think the dot plots are right. So I think
Okay.
so. The dot
Good.
plots talk about short-term interest rates. They're
Yeah.
projecting 3 cuts this year. I think that's what the market is pricing in. That sounds reasonable to me. But
Okay.
I think that's not so. I think that's a policy mistake because the Fed is going off a map that's just not accurate. So they're thinking that the monetary policy is restrictive. And so, in order to avoid over tightening, they're cutting interest rates. They look at the world through the lens of real interest rates, and real interest rates right now are about 2%. And they think that's really restrictive, and they're scared of over tightening. That's why they're eager to cut. But their mistake, I think, is not understanding that, in fact, monetary policy, by all accounts, looking at financial markets, is not really restrictive. And so
No.
when you actually cut and when you're not restrictive and you're actually cutting, you become too easy. And I think that will make growth and inflation, I guess, stay elevated
Okay.
and will put upward pressure on bond yields.
Okay. Can the dollar fight this? And I'm looking for Blake and I have been talking in the 106 area, 106 and a half for dollar shorts for a couple hundred points already. What could drive a dollar peak after this bounce? Could it be the cuts that you're talking about?
So when I look across the road, so when you're talking about currencies, a lot of it has to do with interest rate differentials. What is the US doing vis-a-vis the rest of the world? And over the past, looks like dollar Dixie is about
Yeah,
104.7 now, and it's been
yeah.
trending upwards for the past couple of months. I think what's been happening is that the US, again, has been outperforming other countries, and so the market is pricing in fewer cuts in the US. And I think that that makes sense when I look at the Eurozone, when I look at Canada, when I look at the UK. The US really stands out as performing much better than the rest of the world. And that suggests that US rates are going to remain higher relative to the other countries. So it's not clear to me that the dollar should sell off.
Okay.
But
There are people talking much higher numbers, the milkshake theory, etc. That um, do you think that milkshake theory by I believe it's Brent Johnson has validity?
so On the one hand, if you think about, let's say, how the US has managed fiscal situation by itself, it's would argue for currency weakness. But the US has a couple of things going for it. One is that it is the reserve currency. The other is that other countries are not that different. So it's really muddy to me where the dollar will be going forward. I find it much easier to play other assets that are derived from, let's say, currency debasement, be it equities, be it real estate, be it gold. So these relative plays, one currency against another, I don't have a clear view.
Okay. Okay. It's been basically a chop fest in the dollar for a long time.
Yeah.
While you have a great trend happening in gold, think there's any kind of chance for a pullback in gold? People are really getting FOMO now
Yeah, I
about
saw
buying gold.
gold just shoot up at the Sunday overnight session, and I felt like I've seen this movie before. We just
Yeah,
had this happen just not too long ago, right? And
yeah,
it got aggressively sold, and it looks like it's getting sold right now as well. We've given back a lot of the from the highs of overnight. We've given back a sizable chunk of it. But I think gold should rally significantly. Again, this goes to the argument that rather than look at, let's say, dollar against other fiat currencies, it's much better to look at fiat currencies against real assets, be it equities or be it commodities like gold. Now, I'm not really sure what's driving this trend. It makes sense to me from just a long-term, medium-term macro viewpoint, but traditionally people look at gold and they look at it in terms of, let's say, dollar strength or real interest rates and so forth. But over the past 2 weeks, the dollar has been stronger, Dixie has been trending
yeah,
higher, real interest rates remain historically quite high at 2%.
yeah.
So it doesn't make sense from those standard macro points, but it makes sense to me just looking at where we are uh, in this great mismanagement of fiscal policy across the world. Now,
Okay,
I'll also note that we do hear a lot of news about, say, central banks buying gold, trying to
yeah,
diversify out of dollars. That always made sense as well. After all, when we have the Western powers not just seizing Russian, not just
right.
freezing Russian farm reserves, but also talking about giving them to Ukraine, that's going to cause a lot of concern among countries that are not best friends with the US. But again, these medium-term factors that have been here for a while, so I'm not sure what the sudden impetus for Sunday Night Open is.
Well,
But
you
again,
did, I saw in your Twitter stream, you did have a comment on US dollar yen, which is 152 area.
yeah,
They're trying to defend basically jawboning. Um, and that it's a waste of time. It's not going to work, and that the yen is headed much lower, but in this pairing much higher,
it
over
looks it
152.
does look like the it's been kind of it's like it's bumping its head against the ceiling about 151, right? It's been there for
Yeah,
looks like it's
yeah,
almost over a week. So
it finally took the stops out over the October 22 high last week. So
So I'm thinking that this is it's going to be so I mean if you zoom out a bit, I like the chart that you're showing there. It looks like the dips are getting shallower and shallower and
yeah,
shallower and we're just bumping against that ceiling. I think ultimately we're going to break past that and it's just going to surge higher. Now, they're in a really difficult spot because the fundamental driver of this, of course, is the difference in interest rate policy. We got, say, 5.5 here in the US, we got 0 in Japan. Now, Japan was negative until, let's say, a month ago.
right.
Now they're at 0. That's not really going to make that big of a difference. You still have over 500 basis points in policy difference. It's the same Japan vis-a-vis Euroland or Canada or UK as well. So the fundamentals, just looking at interest rate differentials as the fundamental, is suggesting further yen depreciation. Now, they have a lot of currency that they can use to intervene. So
Yeah,
the Ministry of Finance there has about 1.1 trillion. Not all of it is in dollars. I'm guessing the most of it is. So they definitely have several $100 billion that they can spend to kind of stop this advance. But at the end of the day, you're only buying time. That interest rate differential is just too wide. And maybe if they buy time, we could have a weak NFP or something like that, market prices in mini Fed cuts, and that takes pressure off the yen. That could happen as well. Um, So
Does the
that
Fed care? Does the Fed care about what happens to the yen?
I don't think so. No, that's their problem.
Okay, benign neglect. Okay. Um, all right, so that's interesting on the yen. I wanted to also touch upon something you talk about in your stream, how these inflationary times changed the culture. First of all, historically in France, we know how it changed. It changed it into a guillotine culture, right?
You know,
That was
at the, yeah, at the end of the so in revolutionary France, the currency was losing tremendous amounts of value. The government was very mad. You know, they did price controls and so forth. And of course, they tried to decree the value, making sure that you had to trade uh, parved between what the currency is worth and gold and so forth, and they would back that up with a guillotine. So some people, I think there was a quote, it was a guillotine-backed currency. If you did not do what the government, wanted you to do, they
yeah,
would kill you, and they killed many people. But at the
yeah,
end of the day, it was not enough. But I think one thing to note about countries that have high inflation, and not just in France, you see this in not just in revolutionary France, but you see this throughout history, is at the end of the day, when you head into inflationary times, assets appreciate significantly, and the people don't actually do well economically. And so what
right.
happens is that the people who benefit the most are those who speculate. And everyone begins to realize that in order to make it, you can't be working on your hard at your job. That doesn't get you anywhere. You can't save money. That's a waste of time. You got to speculate. And that's a kind of a fundamental change in culture that you see in many countries actually that have high inflation throughout history. And maybe we see a little bit of that today, right? We got a lot of people who are speculating on crypto,
Yeah.
memes, tech stocks, and so forth. And uh, it's been working out much better for them than people who would just work a regular job, have their wages erode by inflation, never be able to afford a house, and so
Yeah.
forth. So again, things are fine here so far. They're heading towards a wrong direction, and maybe they'll become worse. But we just see a little bit of that here in the U.S. today.
Okay, and it was like that in Japan when in 1989 when the
1980s,
Nikkei,
yeah, yeah.
yeah,
There's a boom there. So Sid Perdue cites a very interesting story where one of the central bankers of the time was giving an interview about the time in the 1980s Japan, and he was like, "Gosh, everyone just wanted to make money by speculating. It had a corrosive impact on the national moral character. People just became, I don't know, basically became like degens, and that was not good for the country. And it ultimately ended in a spectacular collapse that put Japan in hard economic times for several years.
okay, is that what's happening in China now? Because the citizenry invested heavily in real estate and their stock market, which both have been in severe bear markets, and you're getting the opposite effect of inflationary times. What happens to cultures? And we experienced it here in the US during deflationary times.
So in China, it's a little bit different. So people don't really buy stocks. And the Chinese culturally really like real estate. And as you know, Dale, there was a tremendous speculation in real estate over there. I mean, Chinese people don't just buy real estate at home, they go around the world. Vancouver, for example, is very famous
Yeah,
for having a lot of, I think, Chinese there, and just, make the real estate market go to the moon.
yeah.
And as you know, there's been a deflationary wave there. My sense, though, is that, that they haven't. So we know the property companies aren't doing well, but the typical person typically doesn't seem to have had big losses on their real estate prices at the moment.
Oh,
And the
okay.
government is doing everything they can to just keep things together. I don't really worry about that because in China, things are different than they are in the West. The government controls basically everything. So if they want, they can just force the commercial banks, which they own, to continue to lend to the property companies, to continue to lend to people and roll their loans over and over for forever, really. So I think any kind of collapse is just not in the cards. But I think it will have an impact on their culture, whereas maybe they don't view real estate as secure as it used to be. And then if that's the case, they'll find new assets to speculate in. Looks like the government is trying to stir up interest in the stock market. We'll see how that goes.
Okay, and I did want to talk about if your opinion of because you're talking about mismanagement by the Fed, and I know you were a Jay Powell and felt he was a credible guy. To me, he's like Jekyll and Hyde when it comes to his press conferences, and you never know which Jay Powell is going to show up. Has your view of him and how he's handling the Fed changed at all over the course of the last couple of years?
So I like Jay Powell. I think I think he's someone that with integrity, and I think he's doing the best job that he can. But I think he's in a difficult situation right now because him, like any other person, uh, operates under political constraints.
Okay.
So, let's look at the board of governors that Fed governors he has to work with, right? Like President Biden appointed a whole bunch of people, and those guys, they're really dovish. So he has to be able to work within that constraint. And of course, um, so we
Yeah.
are in an election year. So I think there's a lot of things that, maybe we're not aware of, but actually do constrain what he can do. And of course, he works with staff that are, basically all in on these economic models that tell him that uh, financial conditions are restrictive, inflation is going to come down, everything's going to be okay. Those guys are totally wrong when they're talking about transitory, but I get the sense that Jay Powell kind of has to listen to them, or at least give some weight to what they're saying. So I think he seems dovish now, and I think that reflects some of the constraints that he's under.
Because he knows history. And in the 70s, you could win a battle with inflation for a while, but you didn't win the war. It took 3 tightening cycles and a draconian one to really get a handle on it. So
Well, Arthur
he's not
Burns.
Paul Volcker.
No, he's not Paul Volcker. He's Arthur Burns. But let's be fair to Arthur Burns now.
Okay.
He
All right.
he wrote a speech called The English Central Banking. Arthur Burns did. And back then Arthur Burns was actually a very respected economist. He was he was someone who was not considered a dove, but in his speech he would tell you that he could have got inflation under control anytime he wanted. Could have just raised interest rates a lot and then caused a great recession and got inflation under control. But then he said that he just couldn't do it because he didn't feel like he had the political support. He said everyone at that time, from Congress to the people in the Fed, they were really pro-worker. They were really trying to, they really valued employment over inflation. And so he just didn't have the political support to do what needed to be done. And so in a sense, he was a man of his time. And it was only after many years when the public really got sick of high inflation that they were willing to tolerate the super tight monetary policy that Volcker brought to get inflation under control. So again, these guys, they are kind of, in a sense, they're very important, but Fed chairs are ultimately a cog in a much bigger socio-political machine. And so they have to work around those constraints.
Yeah. So the independent Fed is really just not really true, that they are political animals. And a lot of people are going to accuse Paul of being political by cutting, if he starts in June, ahead of the election, that he fears a Trump presidency and wants to help Biden if he can.
So you can look at public donation data, opensecrets.org. Basically, everyone who works at the Fed donates to Biden. They don't like Trump. Okay, that's clear. But I don't think that a rate cut in June would necessarily be politically motivated. I think from their perspective, and they've laid it out really clearly, they think that rates are too tight given where inflation is. And so I think it's reasonable for them to cut rates.
Even though they know financial conditions aren't tight.
Well,
and so, if we know it, they know it.
Right. So Governor Waller, to be clear, Governor Waller, top guy, Fed governor, Trump appointee, was asked this question, I think, actually on Friday. And he's like, He thinks financial conditions are tight. Why? Because he says interest rates are tight. Look at mortgage rates, look at auto loans. He cares about these things rather than the financial conditions index. And he'll tell you why. He'll says that, well, financial conditions index, a lot of that is equities, and that's just the Mag 7, right?
Yeah.
Can't just let this Mag 7 set monetary policy. And credit spreads tight. Well, maybe that's just the rise in private credit competing with all these other lenders and compressing spreads. That doesn't necessarily mean monetary policy is tight. Now, I think he honestly believes that. So now this
Okay.
guy, I don't think I don't think he's a Biden guy. So he honestly
Okay.
believes that.
Okay. Yeah. You used to believe that we wanted to escalate in Ukraine, and that's changed with support dropping and for the war here in the U.S. And I'm wondering if you think that this political season can make the Fed look powerless if we end up in a constitutional crisis. And do you think that might happen?
Oh, I don't know if we'll end up in a constitutional crisis. We are
Okay.
definitely polarized, and I hope that the election goes smoothly and that people are able to accept whatever the outcome is. Um, but what I've seen over the past few years is that, it's kind of a full court press when it comes to politics. It's no holds barred. I remember in
Yeah.
2020, we had the government strongly, heavy-handedly influencing the press, even platforms like Twitter, on whether or not to show stories that are flattering or unflattering to a particular candidate. So uh, I think they'll do anything to win, and
Yeah.
that's probably not going to be good for the public. And I don't know what will happen.
To the markets.
The markets,
Will they see through that? They see through everything.
well, I think whoever wins, though, is going to be market positive because everyone wants to spend more
Okay.
money, and spending more money is very good for the market.
It's just who they want to spend it on.
Exactly. Now, Trump would
All
like
right.
to have tax cuts. Biden would like to have maybe higher taxes on some and spend more on green stuff. But
Okay.
I think Trump would be better for the markets because I think tax cuts are more stimulative to the economy than just spending money on green energy and stuff like that or forgiving student loans. But they'll both be good for the market.
Okay. And there is talk that we might start with the CBDC this winter. Do
Nah,
you see
nah.
that coming? No?
As long as Chair Powell is chair, I don't see that coming. Now, we're really lucky in that Chair Powell is Fed chair and not, say, Lil Brainerd. If we had Lil Brainerd as Fed chair, we would be on CBDCs probably by winter. So globally, if you look across the world, you have the Eurozone, the ECB, all in on CBDCs. They're studying it. They're going to roll it out. That's their thing. Um, Probably in Canada as well. In Japan, they actually just looked at this and decided no, apparently because their population is, they have an old population, and the older people don't want to learn how to use a CBDC, and they're comfortable with cash, and so they decided that, yeah, well, we can't do this, or people wouldn't know how to use it. But here,
Okay.
though, now Chair
Good
Powell has
place
been.
to move to.
It's a great place, actually. You just have to
Yeah.
speak the language. So Chair Powell has been really clear that he's not doing a CBDC unless Congress tells him to. So he's just kicking the ball to Congress to decide.
Okay.
And that's great because, Congress probably is not going to be able to decide that because it's a polarizing issue.
It sure
And
is.
I don't think we in the foreseeable future we'll get to a point where there will be like a majority that would push for this. So I think the US is safe from CBDCs for the next few years. An interesting idea I've been thinking is that let's say that CBDCs go to other jurisdictions like the Eurozone and so forth. Does that mean there's a lot of people who, want to hide their money in dollars? Because let's be frank now, some of that money they don't really want to have on the grid, so.
Yeah. Yeah. Interesting thought. And the thoughts just keep rolling in. And if you liked what you heard, and I always enjoy talking to Joseph, subscribe to his stuff so you could read these articles instead of just getting a free email that you get the, you know, just a taste. But if you want the whole thing, plus his courses, if you want to learn about central banks, who better to teach than somebody who worked and lived and breathed it? So, Joseph, I want to thank you again. You know, you've been coming on for years.
I
Now
have,
it's
yes.
been a while, and I want to thank you for your giving spirit to come here and educate and edify the F.A.C.E community all
Oh,
this time. We
well,
appreciate you.
oh, Coach, give me your top trade right now.
Top trade is still long the dollar towards 106.60. Buy the pullback in gold to 2100. Buy the pullback in silver at about 2320.
I like all of that except silver. I don't know what about silver.
And
I've
buy
lost too
the
much money on
gold
silver.
miner. Buy the
Huh?
gold miners, the
Ah,
miners.
I've
I
lost too
know.
much money on
See,
those.
everyone says that. Everyone says that because they've lost so much money. It's a terrible business. But I'm looking for a powerful move in the miners over the next few years. So
All right.
that's it.
Thanks, Coach.
You're welcome,
Thanks,
buddy.
everyone. Talk to you guys
All
later.
right. Joseph Yang at Fed Guy on X, and go to his website and check him out. It's a great teacher. Adios. Hope everyone enjoyed it. Everyone enjoy it? Let me check. Yeah, okay, Alexander, all you guys, Joe. Yeah, check them out. And you could join the team in 14 minutes for the morning edge. So you have to sign up right now to get into the morning edge. It's going to be a great week to trade. All right. So don't just count your pips, count your blessings. Adios, everyone. I want to thank everyone for their good thoughts and migraine cures that you sent me over the last few months, rooting for me to get better. I'm glad to report I haven't had one of those headaches in about 4 days now. So thank you for the good thoughts and prayers, etc. Adios, everyone.